towards the whole virtual currencies, because that's kind of like kids play. But if you look at the overall big picture of at the economy, typically what has happened starting from the 70s is that you will have major market corrections or market bailouts. We started seeing it in the 70s when bankers started taking out risky loan with oil prospects. We saw it in the 80s with savings and loan bailouts. The 90s was actually a pretty good run for the overall economy because we had the internet boom. And I think what's happening with Bitcoin is very similar to what happened with the internet, because the internet helped bring people together. It helped them communicate. It helped them share ideas. You look at Skype, you look at emails. That was something that empowered people. Bitcoin is something very similar. It takes money away from the central bankers, and it allows people to establish their own way of doing things. But after the dot-com run, the first quarter of 2000, there was a significant market correction. In 2008, we saw the subprime crash. Nothing has happened yet as of the 2010s. I know most people are crazy excited about, or I should say some people are crazy excited about Trump and what he's going to do. But, 2008 is not that far in the rearview mirror. It's, we're almost 10 years from that. And, me and my perspective, I'm looking at that as thinking that we're probably due for some kind of serious market correction. So from a sense of urgency perspective, this has gathered my attention, and I've seen this opportunity as really a way to have, to augment Plan A, Plan B, and Plan C, because I think that's what folks need to do just from securing their own financial future. You shouldn't put it in the trust of central bankers or corporate leaders. You need to own it yourself. So plug in my 2 cents there for what it's worth. I don't know if that helps you make a decision or not, but came back and my wife said, "Well, how was your week?" And I said, "This is unsustainable. What they're doing, it's I can't believe. I don't know if most people have heard of quantitative easing, but when the 2008 crisis happened, the U.S. government wanted to help stabilize the economy. They turned to the Federal Reserve because folks were not buying, and I'll use folks in air quotes here, but other countries were not buying U.S. debt the way they had in the past. So the Federal Reserve stepped in with a program called quantitative easing, which meant that they were going to, quote-unquote, buy the debt from the U.S. government. Now, the way the Federal Reserve buys debt is through printing money, because we own the printing presses. So out of thin air, money was created to support debt that the U.S. government needed. So we are the number one supplier of those funds through the quantitative easing program. At its height, we were supplying the federal government with $80+ billion a month to prop up the economy. And I think you saw a lot of that with the price of stocks going up, because most of that money went in to support other central banks, other retail banks in the United States. So quantitative easing happened. It went on for I can't remember how long, but the overall total sum of money that was printed to support the U.S. government was close to $5 trillion. And that's kind of off the records. That's not on any of the official government books. That's debt that's held by the Federal Reserve. Most people don't realize that. And to me, in my way of thinking, it's like paying your mortgage with your credit card. Sure, you can do it, and it's easy to do, but boy, you're really shooting yourself in the foot. And when you talk to economists, their proposition is, hey, we're doing this because if we stimulate the economy, jobs will grow, we'll get more in taxes, and we'll be able to pay off this debt. If anyone takes a look at the debt clocks, or you can look this up on the internet, you can see almost nearly an exponential growth pattern in how the debt of the United States has transpired to grow pretty much unchecked over the past 20, 30, 40 years.
Incredible.
past a little bit, I actually have contacts in India, and there is a movement within other central banks around the world, like the Indian Central Bank, the Italian, I guess, I don't know if it's the Italian, I guess it would be the European Central Bank, but there is an effort to start banning cash, and this has specifically happened in India, where the 500 denominated rupee bill and the 1,000 denominated bill have been banned. They have been deemed to be dirty money, and if you have those bills, there was a period of time where you could turn them in without question, but after that point in time, if you were caught with those bills, that was bad news for you. The ironic thing is, a 500 denominated bill with the rupee is worth in U.S. dollars to be about $20. So they're trying to push people to the electronic medium. They're trying to crack down on cash, and subsequently, more and more people are starting to use Bitcoin because they don't have to have that kind of harassment from the government. So I just think it's kind of interesting that has started to spread. I know there have been talks with the Italian banks to start banning certain bills, and I think it's one of the things that I like to do is watch what other central banks are doing around the world. You'll notice that their interest rates are negative right now. You look at the Japanese central bank or the European central bank, and they have negative interest rates. People say, well, what is the negative interest rate? Normally, when I put in $100, I'm expecting to get some money back. But if you're over there in those countries, you give them $100, you'll probably get back 98 or 99 because they're going to charge you to hold your, quote unquote, your money. So, be proactive in protecting your assets. I guess that's what I'll leave with.